A lot has changed in the last 24 hours, changing the outlook of where the economy is going to go, and as a result, gold and silver are suffering. Let's talk about what happened and the one thing that you need to know about perspective. I'm going to talk about later in the video as we explore. Perspective is everything, and that is something that I'm going to remind you of later in the video. But first, let's talk about what's going on in the markets right now. There's been a radical shift in the last 24 hours after new data that has come forth that means that inflation is running hotter than they expected, big time. The producer price index numbers have crushed the forecast. And gold prices have taken a hit here today because of that. In fact, not as bad as what silver did. Silver took a much bigger hit. In fact, it plunged today below $38. In fact, it got as low as $37.75. It's recovered some of those losses, but it is still down sharply. But at the times like this, whenever there's a dip, if you are just a pure stacker, and we talk about all different kinds of silver you can stack, such as this collectible type stuff or semi-collectible, and really everything is numismatic, so I don't like to call it semi-numismatic. But nonetheless, some of this stuff is out there, and pure silver stackers, they want just eagles, Britannias, maple leafs, and that type of thing. Well, whenever there's a dip in the price, it's a good time to buy. My friends at Summit Metals, check them out, and they've got a growing selection of bullion products as well as collectible silver out there, so check them out and experience their great customer service and their fast shipping times. Now, what is going on here with the market today? Sentiment is changing dramatically. Now, this is something that we've seen investors now are pricing out chances now pretty much is gone, erased, of a 50 basis point rate cut for the Federal Reserve at the upcoming meeting next month. The U.S. Producer Price Index, a July figure from the Bureau of Labor Statistics, has crushed estimates in June's print. Core PPI soared and was shy of touching 4% amid an environment in which the White House demands lower interest rates, saying that tariffs are not inflation prone. Other data revealed that the labor market, which showed signs of weakness, remained strong, as a number of Americans filing for unemployment benefits dipped below forecast in the prior week's report. Now remember, some of the data that come from the Bureau of Labor Statistics, we haven't really been that trustworthy for a number of years. In fact, even going back to the first Trump administration. So that's why I call some of these numbers, what comes out of there, these institutions, these three-letter agencies that report some of these statistics, as the chefs at the Cook the Books Club. And nonetheless, can we believe this? I don't know, but my guess is probably there is some truth to some of it. I like to think that they're independent-minded and nonpartisan, but we've seen that has not been the case. Hence why Trump has fired the person responsible for employment numbers. Now, these are inflation numbers coming out, and even though the CPI look good, the PPI is really a stronger indication of what is going to be driving inflation. After the data was released, traders discounted a 50 basis point rate cut by the Fed. Instead, they have priced in a 25 basis point cut, with a slim chance that Powell and his colleagues would hold rates unchanged. In other words, there is a chance that they may leave them unchanged. Now, again, if you look at the Fed Watch tool, which is a good metric that gives you some target rate probabilities for the 17th of September meeting coming up next month, well, it was like 92% for a 400 to 425, which is a quarter point cut, and like a 6 point some odd chance of a half point cut. That has now changed. Now it's 7.4% believe that the rate will remain unchanged. That's a pretty high number. A radical shift from just one day ago because of these data that have been released. So that is pretty fascinating. Now, this is something that we're seeing now boost the dollar up, because higher interest rates really means a stronger dollar. And that's what we're seeing right now. the dollar is now up 0.48% to 98.19 again. And this is something. The US PPI rose 0.9% month over month in July after being flat in June. On an annual basis, the PPI accelerated to 3.3%, up from 2.3%, well above the 2.5% forecast. Core PPI, which feeds into the Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index soared 3.7% year over year, which is up sharply from 2.6% in the prior month, underscoring that companies will likely pass higher tariff-related costs on to consumers. And so some of the data are coming out now showing that as tariff revenue comes in, well, those costs are being passed along to some of us, to us, and this is a result of that. Although, remember, that is not a true measure of inflation. That's just price increases. And that's something I've never denied, that price changes and higher prices can come from taxes. And yes, tariffs are taxes. And it also means that likely, even though they're up, that some of these companies, as foreign companies, are absorbing some of those costs as well, too. They're sharing the hit, and because they need to be competitive with some of these domestic companies here in the United States. So we'll see what happens if this continues, if this trend continues, and it will certainly be a sour data and metric if it's accurate for the Trump administration. Unless, of course, you have deep state people in there that are running these numbers, and maybe Trump will fire them too. I don't know. We'll see. Now, other data showed that initial jobless claims for the week ending August 9th fell to 224,000, better than expectations of 228,000. That's good news, and down from 226,000 the previous week. Continuing claims rose to 1.9453 million from 1.96 million, tempering concerns of a cooling job market. And that's really kind of the most important thing. Now that inflation data on the producer and consumer sides are out, investors have turned cautious regarding the path of interest rates. And the U.S. Friday retail sales data would be of interest to know the strength of the economy. A higher reading in the markets could take a Fed rate cut at the September meeting off the table. But I think really, even though we've seen it go lopsided up from a half-point cut to no change or a continued pause, the vast majority of folks believe that there's going to be a rate cut. In other words, it's not enough to move the needle, which means that today's price drops in gold and silver are really just temporary, and likely we're going to see this baking in, and we're going to probably see silver's price maintain above $38, which is where it is now in the ask price, and likely will continue to be trading in that range and probably even move up from that as we head closer into that meeting time, which is, again, I can't stress enough, that's more than a month away, folks. A lot can happen and change between now and then, which is one of the reasons why I think baking in the prices now is really premature and not necessarily a good thing. But we'll start to see it. And a lot could happen and change between now and then. But the one message I want to send to you that you need to know right now is that the fundamentals have not changed. And I think even in the immediate economic outlook, it has not changed, because it's still around the same percentage of the probability that the Fed is going to lower rates to a half point or a quarter point down to the 400 to 425 range. That's still right around 92.6%, which was the same as it was yesterday. Nothing has changed except for the outliers, which are so small that likely it's probably not going to happen. This level of confidence with a month away just shows us that we really have baked in. It's just a matter for the economy and to absorb these latest numbers and to make sense of it all. Now, again, I'm of the mind that we're going to see things move and the markets react. They tend to overreact when these numbers come out. And but nonetheless, it just goes to show you that the strength of this is up, but the value of it is something that is going to continue to fall. And so when you measure actual inflation, and which is really as a result of government spending and the Federal Reserve printing money, it's even outside of what's going on now with the Federal Reserve or with the interest rate situation, that is going to continue to take its toll in terms of a hidden tax on all of us. So That's what's happening there now. So understand that this is just a move that we're seeing from one day to the next. And even though this channel exists to provide you the latest news and analysis on what's going on in the markets, sometimes from a day-to-day basis, the fundamentals have not changed. We're going to see moves like this. I'm still overall bullish. My outlook has not changed for silver or gold, for that matter. I am bullish on both metals. Does that mean you should make a decision to buy or to sell based off of what I feel? Heck no, no way. I'm just an opinion. I just have an opinion like everybody else. Now, I like to think it's somewhat educated as I keep up with the markets and see these trends emerging with the moves, but nonetheless, overall, I believe it's looking good for gold and silver to preserve your wealth, and maybe some more than that. And we've seen that already take place this year in 2025. So that's why I'm still bullish on the metals. And I think that these interest rates are going to be coming at some level, and that's going to be good for gold and silver. The dollar will become weaker. Inflation will remain sticky, even though it's not like crazy out of control. It's above what the Fed wants, and it's above what a lot of us want, by the way. And we have to adjust to the new paradigm of tariffs. And that level of taxation occurring from the goods coming into the United States and how that's going to be managed through the economy and through the situation. So there you have it. Let me know what your thoughts are in the comment section down below. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.